During market manias, a lot of people just lose their minds. We're all humans. We all have the tendency to forget about the past and only see what's happening near time right now. Look, the markets are showing a lot of strength. The dollar's strong. The S&P, the Dow, the Nasdaq, crypto, gold, commodities, oil even moderating a little bit. The key point I'm trying to make here is that we've seen the markets, financial assets, tangible assets, all show some major exuberance, some all-time highs in just the last few weeks. And all this has happened since the great financial crisis of 2008, 2009, when the Federal Reserve, the Treasury came to the rescue, as they do many, many times, and pumped back up the markets by doing what? By flooding the market with money, by using QE to basically buy the debt that the Treasury has to print to keep the debt going in this country when other countries won't buy it. And all this does is continue to devalue and debase our currency. And so when people feel like everything is going up and up and up, understand that that's just a reflection of the loss of the purchasing power of the dollar. Now, yes, if you're in a position in life where you own assets, you own business or businesses, you own some hard assets, even financial assets that have done well, you've made a lot of money and it feels good. And it feels like you just can't lose. We all go through this. My point is, this is a time to be very, very careful, maybe even a little bit fearful. And I'm not talking about being pessimistic. I'm a very optimistic person, but I'm a realist. This is where I see people miss the mark time and time again. This market cannot continue, even with the certainty of an election behind us, with the propulsion of a new administration which portends to come in and cut waste. I'm a fan. To moderate and keep taxes down. I'm a fan. To close the border and reduce the spending of millions and millions of dollars to illegal immigrants. I'm a fan. To hopefully reduce the tensions geopolitically and maybe even bring peace to Russia, Ukraine, and stop the billions of dollars that are going to Ukraine just to foment the military industrial complex, which puts tons of money in a lot of people's hands. I'm a fan. I'm a fan of all these. The point is, there's going to be a correction in the marketplace. There is going to be no soft landing. Our new president, Donald Trump, has got a mandate, and I believe he's going to really, really go hard to try to push this through. And I think in the long run, the long game, his principles make sense, but there's going to be a price to be paid. And different sectors of the marketplace, different people, different businesses, different investment classes are going to take hits. Not everybody can be saved. I can't tell you which sectors are going to be affected. We can make guesses. We can make predictions. I think the key point here is if you've made a lot of money in any asset class, it might be time to take some chips off the table. Maybe take a lot of chips off the table, meaning take the profits and put those profits in something not quite so sexy, not something that's trying to shoot to the moon. And that's not fun to do because everybody always thinks like, well, if I would have done that, if I'd taken money out of the market a year ago, 2 years ago, 3 years ago, 6 years ago, I would have missed all this. Yes, you would have. But you can always leave some money in this more speculative market. And I think in many, many asset classes, we're in that very highly speculative area. It feels good because things seem to go up and up and up. I would leave less and less money in the all-time highs and be pulling it out and putting in things as boring as treasuries or money markets or precious metals, something that has a lot of downside risk protection because there's no counterparty risk. And that's what you've got to look for. And you might say, well, David, I can't do that because you just told me that inflation's running hot. The debasing of our dollar is going like nothing else. And I agree, it is. But I think, again, this is where discipline comes into play. Understanding where you are investing your money outside of the no-risk asset classes I just mentioned. We have to have some money in risk assets, some money. And the risk premium, that is the potential benefit that we are seeing in many of the yield projections in all asset classes are very, very narrow, or they're not realistic for what's going to happen. And that's why I say this is time to be cautious. Hey, look, Warren Buffett, one of the smartest investors of all time, is sitting on more cash, $325 billion of cash in treasuries right now, when he could be putting that money anywhere he wants to. He took money out of Bank of America. He took money out of Apple. He's seeing the tea leaves. So what I'm saying to you is, it doesn't mean you can't stay invested in certain asset classes. I am. I think you should. But this is a time when you've got to know what you're investing in. Deeper dive than ever before. And if you're not willing to take the time to do that, then I'd say risk off. Risk off. Wait. And you can always just come back in and dollar cost average when the market starts to correct. Real estate's already going through that correction. It's not fast. It's not furious. It's not like an elevator drop, which is what the stock market and the financial markets will do. It always goes up like an elevator, the financial markets, and it drops like an elevator. Escalator, elevator, if I said that correctly. You've got to be careful of that, because when the financial markets drop, it's all on sentiment. There's a negative wealth effect that people start selling off because they're afraid, and they start losing margin, they start losing net worth, and they say, I've got to get off this elevator, and the elevator's dropping faster and faster, and it's just a vortex to the bottom. Be very, very careful, my friends. I like tangible assets. That's where I like to be. There's less volatility, but there is volatility. There is changes in the market cycles there, but I can do a deeper dive. I can have more closer proximity to my investments. It's what I believe in doing and what I've done for 40 years. I've done it with other people. I believe in collaboration. I believe in mining the experience of other people and being around other people who also bring experience and also access to specific assets that you can't get in the financial markets. You can only get through insider information, which is only available legally in alternative investments. So you can tell I'm a big fan of alternatives. Wherever you invest today, just be careful and understand that there's volatility ahead. No matter what we want to be as far as optimism, I'm always optimistic. I'm optimistic about America and what we can get done here, but you got to be careful in the meantime. It's all about your freedom. Take good care.